Hi there, Serial Trader here. So I'm going to do an update on crude oil given the recent price action to the upside. But we'll just start with this overall picture of what's going on in the daily. So if you looked at the last video I did on crude, the big picture, you'll know that we're working this larger degree ABC up for what would be a even larger degree wave 4 of a larger degree wave C, and that decline has been taking place since I believe 2011. So off this bottom at 26 and change, we had a 5-wave move up in wave A I've labeled. Then we had this sideways range, which was quite difficult for directional trading, in an ABCDE contracting triangle, wave B, and then we've been working this impulsive advance to finish off what I'm anticipating to be wave C of 4. Now I've relabeled this, but before what I was kind of leaning towards was that we had something like this, right? So we had a 1, 2, 3, 4, 5 of 3, 4 down, and then where's my 5th wave label? Okay, it's up here. And then we had our top, potentially our top in wave 5, and we were working a 1 down, 2 up, and then anticipating another leg down in a 3rd wave, or alternately we had something like this, right? And then we were working a larger degree A, B, C down for this 4, and then possibly expecting higher in wave 5 after that. So that doesn't look as likely at this point. So I'm going to go ahead and just put this over here. Okay. And then our 5, we'll just put it up higher there if that's where we're going. And let's dig into this a bit. So this is the daily chart. Can't quite see the subdivisions as well as I would like. So let's go to the 4-hour. It's a little better. Okay. So from what we can possibly label as just a wave 3 peak now at this point, given this strong advance today. Now this doesn't look like a very good corrective decline. It looks quite sharp and impulsive, and yet it doesn't really have an overly clear 5-wave structure, at least not a very pleasing one visually. So maybe that's kind of a hint that it was corrective, even though it was very sharp and impulsive in nature. But anyways, if that really is just a wave 4 sharp pullback, possibly we have a 1, 2, 3, 4, 5 up for a larger 1, okay? And then we have an A, B, C down for a larger 2. And then we have a smaller degree 1, 2, 3, 4, 5 up, okay? For a different degree wave 1 degree smaller than this, of 3. Am I displaying that here? Yeah, here we go. Here's that wave 1. So for a 1 of 3, we have a WXY down, double zigzag down for a wave 2 of 3, and then we're going up in the 1/3 of a 1/3 here. And usually the 1/3 of a 1/3, if you have a it's called an extending 3rd wave. So the 3rd wave within itself has its own extended 5-wave sequence. That's why I have a 1, 2, and then a 1, 2 of 3, and then we're coming up in a 3 of 3. If that really is the case, it should have no problem. Well, not only making a new high, obviously, that's very important that it does that, but it should have no problem breaking out of this parallel trend channel, okay? This upper boundary line. If it really is a 3rd wave, it should just slice through that without issues. Now, if we peter out here quickly and do not make a new high, okay, then we can still entertain the possibility that because we're contained within this corrective channel and we have not made a new high, that the original interpretation that I've been working with or preferring up until this point is still in play, and we're still coming down to test or make a new low here at the minimum. But right now, I cannot ignore the vertical nature of this price action today and how deep it's already gone. So, I mean, it's really starting to argue the fact that we're going to make a new high here. But I'm not actually going to trade that. Oh, speaking of trading, so I actually was able to successfully close one of my option trades. And it was on USO, so it was United States Oil Fund. I had a put spread on that. And I closed that somewhere in this range where we trended down nicely. And not because I was actually feeling any need to abandon the trade at the time, but more along the lines that, well, I feel that, at least a partial retracement was coming. And initially that's all it looked like it was going to be here. But then obviously it became something else. So really just out of kind of a, no analytical reason, but just from a trade management perspective, it was already quite profitable. And I felt it was a good idea to close it, and maybe I'd look to re-enter on another little uptick there. Now, I didn't actually re-enter. I was doing other things at the time, and fortunately for me, I didn't re-enter because it would have been a loser the second time, because we did not get that follow-through that I was initially looking for. I was initially looking for that lower boundary line to be broken, and then to come down and test or exceed these lows. Neither of those things happened. So at this point, I'm not in or anything on a trade yet, but if I see this decisively make a new high and start coming out of that upper boundary line, I'll be looking at a bullish trade. Perhaps some USO calls or maybe a call debit spread, since I do think the upside is still fairly limited. So the debit spread would just kind of limit your maximum profit potential, but at the same time it would limit your risk because you're getting paid a certain amount to sell the calls at a higher strike. And if you pick a strike that reflects a level you don't think the market could get to anyways, then that'll be beneficial to your overall position. So zooming out here a bit on the daily. Let's really get out here, yeah. How's that? Okay, so if we come out here, I'd say we can expect to at least knock on that $70 level, maybe somewhere in the low 70s. But I will remark something on a bigger picture perspective. So might have to go with the weekly here on this one. Yeah, on the weekly. So if we actually go up now, since I'm on the weekly, I should go log scale, just so it's more proportional. Hang on. Scale. Price scale. There we go. So on weekly log scale. So our wave 1 of C comes in at around, this large degree one, that's what I'm looking at. Comes in at around, right at $75 was the low on that. Okay. So if this is really going to be a 1, 2, right? 1, 2, 3, 4. 4 cannot overlap 1. So $75 is the line in the sand for that count. So if it went to 75.01, it's wrong. It can go to 75, but not a tick above. And preferably well below, actually. But that is the technical number where that wave count becomes invalid, because wave 4 may not end in the price territory of wave 1. That's actually an Elliott wave rule, not a guideline. And certainly on a weekly chart, it's very significant if it did, because then this overall count would have to be changed, and the overall outlook would have to be changed along with it. But let's go back to that daily. So I'm thinking that below 75 is going to be a ceiling, because I'm pretty confident that overall count is correct. Not 100%, never 100%, but that's certainly my preferred outlook going forward. So interesting setup here on the daily. There's not a trade yet. If you were short, hopefully you got out with some profits. If you're still short, I'd have trouble recommending staying short, although ultimately if you wanted to really give it the benefit of the doubt, this is your stop right here. 66.52, that is the line in the sand. And then obviously if that broke, you're almost certainly going to break the 66 high there. So keep that in mind. Now, if I do see this decisively break our overhead resistance and get out of this trend channel, I will probably establish a long position with the objective of somewhere around 70 or in the low 70s for a swing trade. But at this point, still waiting confirmation. Hopefully that was helpful for you. And today I just thought I'd try out this different chart since it seems to look better on mobile devices, which a lot of people seem to view their videos on. Me personally, I like to watch things on a nice monitor or on a desktop or a laptop. But I understand it's a mobile world, so the phone is nice. You can just watch stuff wherever you're at. So this looks better on the screen, or at least I've been told it does. Anyway, hopefully that was helpful for you. And yeah, let's keep an eye on crude here. It's interesting. It's interesting, you know, short term, but it's also interesting long term. It's really, it's going to be surprising to me if that $75 wave overlap took place, because that would really change this overall interpretation. But we'll cross that road if we get there. All right, Serial Trader signing off.